Hey everyone, this is Kirk here again at OptionAlpha.com. In this video update, I want to go through all the trades that we made today on Thursday, October 26th. So today, as we mentioned earlier in the week, and I think last week as well, it was going to be a pretty busy day of earnings, and it sure was indeed. We got into a lot of positions, and undoubtedly tomorrow is going to be very busy as well. So as we get deeper and deeper into earnings season, we're going to have this where we have lots and lots of trades, potentially overlapping trades on days. So as always, take your time with everything. Don't rush through things. These prices do move around a lot, so stick around and wait for your price. Don't feel like you need to rush into things. I'll kind of mention this here as we go along. So first one that we got into today was in Amazon. Amazon was the interesting one always because you want to leave a little bit room for Amazon to move. It already announced after hours and did move more than expected. The expected move in Amazon was about $35. I think the stock is up about $55 or so. So we went out about $40 on either end, selling spreads with a little bit more room to move, which worked out last time for Amazon and it might not work out this time, obviously. So we went ahead and sold the 10.15 and the 10.35 options in Amazon and then bought options $5 out on either end. It was interesting because the price was kind of settled around 190 when we got into the trade and was moving all over the place. I mean, that was kind of like the midpoint. But if many of you notice, I know a lot of people like email me right away and they're like, I got two emails probably like literally back to back. One person said that they saw literally 15 seconds after they got the alert, Amazon was trading, or this spread was trading for 160. The other person I got an email from, and the spread was trading for like 230. I mean, it's like that's the type of range that sometimes these things have when you get into earnings season, especially for a big name company like Amazon or Google or Tesla, etc. So what do you do in that situation? Well, you try to pick the midpoint or somewhere around where it's going to settle. Sometimes you can stretch for sure. Like we try to stretch earlier in the day at like 3 o'clock. We were trying for like that 220, that 230 type price just to see if during that fluctuation you'd get hit. But eventually you just have to kind of whittle it down just a little bit and find something that's, comfortable for you. And for us with Amazon, we felt like like the 190, 185 range was pretty comfortable. So that's where we ended up kind of letting it sit for a little bit and got filled, maybe about 10 minutes later. So again, with Amazon here, and I'll show you the chart of where Amazon is. After hours is trading at 10.50, which is a ridiculous move, obviously. But we'll see where it goes tomorrow. A lot of stocks after hours tend to have really big moves and then maybe pull back or whatever the case is. So we don't know where Amazon's going to go. This is the move it made. After hours, again, it was expecting about a $35 move. We gave it a little bit more room, just didn't give it enough room this time around, right? And this is good because, well, not good because obviously it might be a losing trade, but what I'm saying in this instance is that this is the exact reason why the next time that we have earnings in Amazon, and it happens all the time, like Chipotle is another example, it'll happen again in Amazon. When people go through this type of earnings event, then the next time that we see earnings in Amazon, they might price in now a $60, $70 move in Amazon. And the reality is that it's not going to continue to hit those long strides. So this is a natural self-adjusting system in that as the market becomes smarter and more aware with more information, if this is a larger than expected move, then the next time Amazon announces earnings, the market's going to price in a $60, $70 move, and it may move less than that, right? So it's got to continue to hit these higher and higher bars, which we know it's not going to do all the time, right? So that's why we got to keep trading these, even though in this case, we might have a loser on this one as well. Okay, so tomorrow, adjustment strategy for Amazon is pretty similar to Chipotle in that we're going to try to roll the position to the next contract month. It depends on where Amazon goes and how far out of the money it goes, but the idea is going to be to roll the call side out to the next month, if we can do that, and move up our put side to create an iron butterfly at the 115 strike, which is our short strike. If we can do all of that net for a credit, then we'd roll it out to the next month. Now the call side, we probably won't roll for a credit, but it's only if we can add the put side for more than the cost of rolling the call side, right? So it's the total sum of everything. If we can roll the whole entire daggone thing out to the next month for a credit, then we would absolutely do it. If not, then we'll just end up closing it and taking money off the table. Other position that we got into today was Baidu. So Baidu, very similar setup to Amazon, went ahead and went far out of the money, the 280 calls, the 245 puts, gave Baidu a little bit more than a $15 expected move. That's what the market was pricing in. Right now, Baidu has made a larger than expected move. Our short strike was our break-even point was around 243 or so. Right now, it's trading about 233. So not as bad as Amazon as far as like move-wise, but it has been actually kind of fluctuating in this range. So it actually was as low as 221 shortly after earnings were announced, about 15 minutes after earnings were announced. and then rallied all the way back up to about 240 or so. So it's in the wheelhouse of where we definitely need it to be. Like I said, I mean, it's not out of the realm of possibility that this thing could rally back up to, I mean, pretty much where we wanted it to be. So we'll see what happens tomorrow. But again, same thing with Baidu. We'll look to roll the put side out to the next contract month if we can, and then create an iron butterfly in the November expiration. So if we can do that by rolling down the call side and do it all for a credit, then we would do that. Otherwise, close for a loss. The other one that we have here is Google. So Google was, again, very similar setup to all of these. Expected move in Google was like 35-ish as well. We gave it a little bit more room, about $40 out on either end. Sold the 1040s, the 1060s, the 960 put spread, and gave Google basically about an $80 range to move with. After hours, Google did announce, moved less than expected, which is good. So this will be a nice, good, profitable offset for everything else we have tomorrow. So Google's trading right now about 1018, 1019 or so. Our break even, like I said, was up around 1040. So again, here you go, another example of just the market being a little bit overzealous. Google actually made it up to 1040 as the high, but very briefly, and then pulled back. And this is, I mean, like you can see just how dramatic these moves are in some of these stocks after hours. When you talk about Google as a huge company, was trading as high as 1040, and then literally 15 minutes later was trading $20 lower. And that's just, since we've actually closed the day. So, I mean, we truly don't know where it's going to go. It looks like it should be a profitable trade tomorrow, but obviously we'll have to, wait and see tomorrow morning. Next one they've got into is INTC, which is Intel. We did an iron butterfly here. The reason we could do an iron butterfly here is because the strikes were a little bit closer in. And since they're lower priced strikes, the ability to buy options out but cheap was there, right? So we could buy options $3 out basically on either end for like $6 and $7. Super cheap protection. You really can't get that with a Google or an Apple or a Amazon. It's just too high price of a stock to be able to buy those cheap wings. So we were able to do the iron butterfly, sell the 41.5 puts and calls right at the money, taking a pretty decent credit of about $1.40. After hours, Intel's been moving for sure. Is on an upward move right now, but still should be something that we could potentially generate a profit on tomorrow. So you can see it's within kind of this range that we need it to be in. It's about 42.5 right now. Our break-even point is closer to 43. So right now, as it stands, even though it's rallied up a little bit, it still looks like it should be a profitable trade for us tomorrow. So again, we'll close out, if we can, just the inside strikes and take money off the table as soon as we can, as soon as the market opens. Last one here is Microsoft. So Microsoft was our final entry of the day. Went ahead and did the iron butterfly as well. Again, you can see that we got those long wings for relatively cheap, so we didn't have to pay hundreds of dollars for those. That's why we did the iron butterfly. Try to pin the stock if we are going to pin it. And we did the 79 call and put, which is pretty much right at the money. Took in a pretty decent credit here, which moves our break-even point out $2.33, which was basically the expected move in Microsoft. It was pretty much that. After hours right now, the stock's trading a little bit higher. It's rallied up, so it's just beyond our break-even points, about $1 beyond our break-even point. But it was all over the map, actually. So Microsoft actually opened and stayed lower. It rallied, then it dropped, and now it's rallying again. So again, we'll see where it ultimately ends up. For us, though, we just needed to drop, basically about $1.50 or so, which again is not too big of a move here, given the after hours movement for Microsoft. So we'll see what happens tomorrow. I think this is one that could absolutely probably be rolled for a credit, just if it stays right in this range tomorrow. So I think there's probably a pretty good chance that Microsoft rolls for a credit tomorrow, unless it continues much higher, versus like Amazon and Baidu. I think there's probably a lower chance that those get rolled for a net credit if they stay as far out as they are right now. But we'll see. We'll see what happens tomorrow. So it looks like Microsoft is going to be close for sure. Intel should be a winner based on where it's trading right now. Google for sure should be a winner based on where it's trading. And then Baidu and Amazon obviously are going to be challenged a little bit. So we'll see if we can roll those out to the next month. So as always, if you guys have any comments or questions, let me know in the comment section right below. Until next time, happy trading.